The Bank of Canada did not cut rates yesterday. What does this actually mean for you right now if you were thinking about buying or selling your home? Because while everyone else is focused on headlines, the real impact shows up in your monthly payments, your negotiating power, and the uncertainty you feel when you're trying to make one of the biggest financial decisions of your life. And that's the part most people never talk about. What this means for you, not the banks, not the economists, you, your family, and your next move. Yesterday, the Bank of Canada held its key interest rates at 2.25%. No cut, no change, and no surprise. And for a lot of people, that creates mixed emotions. On one hand, you're not dealing with another rate hike, which is a relief for anyone that's renewing their mortgage soon. On the other hand, a lot of Canadians were quietly hoping for one more cut to bring payments down just that little bit more. The bank didn't cut because the economy has been performing better than they expected. They say that Canada's economy actually grew by about 2.6% in the third quarter of 2025, which was stronger than their forecast. They also say that inflation is now sitting around 2.2% as of October, almost right on the bank's target. And they also say that unemployment dropped to about 6.5% in November. When numbers look like that, the bank feels comfortable holding the rate steady instead of adjusting it. But here's the thing that matters most. This rate hold isn't just a pause. It's actually a signal. It tells us we're likely entering a longer period of stability. Not dramatic drops and not all of these sudden spikes, just a more predictable rhythm. And predictability is something that Canadians haven't really had for a very long time. And that kind of stability, it has very real effects on how you should be approaching buying or selling a home. If you're thinking about buying, the rate hold gives you something that you probably haven't felt in a while, and that's clarity. When the rates are bouncing around every few weeks, it becomes almost impossible to plan your next steps. You don't know what your payments will be. You don't know if you should rush or if you should wait. You don't know whether you're making a smart move or an emotional one. But a stable rate changes all of that. For variable rate mortgages, nothing moves today. Your payments stay where they are. And that alone is comforting for anyone who has watched their payments climb month after month during this previous tightening cycle. And for fixed rate mortgages, the stability in the bond market is a big deal. Banks base their fixed rates on bond yields, and a steady environment means we're not seeing sudden price jumps. In some cases, you may even see lenders compete a little bit more, especially going into the early months of 2026. Now, does this make buying instantly more affordable? Of course not. Affordability improves when rates actually drop, not when they stay simply the same. But what this hold does do is give you the confidence to plan, to budget, and to make decisions without feeling like that rug is going to be pulled right out from underneath you next week. And a lot of buyers right now are stuck in the what if mode. What if rates go up again? What if they drop after I buy? What if I wait too long and prices rise? What if I move too fast and I regret it? This decision from the bank takes some of that pressure off. The ground isn't shifting beneath you anymore, and that alone should reduce a ton of anxiety. Now, if you're thinking about selling, here's what this means for you. Whenever rates stabilize, the buyer hesitation drops, right? People stop playing the waiting game. They stop searching for the perfect rate announcement, and they actually start focusing on what they can actually control. right? Their lifestyle, the space that they need, and their long-term goals. And in Alberta specifically, demand has already been strong. We've had steady migration, consistent job growth, and lower inventory in several cities. When you combine those factors with a stable interest rate environment, you get a market that is going to move with more confidence. Homes that are priced properly continue to sell, and we can even see that in today's market right now. Buyers feel less nervous about committing, and you get the fewer "let's wait and see" conversations. This doesn't create a frenzy, but it does create a healthy, more balanced market. And that's often a better environment to make a move in, whether you're upsizing, downsizing, or even relocating. If you're an investor, you might be feeling something different, frustration. And I know I'm feeling that frustration because many investors were hoping for continued cuts to help boost that cash flow and lower borrowing costs. The bank holding firm at 2.25% tells us that the cuts are not guaranteed in the near future. And some economists believe we may be staying in this range longer than most people expected. So what do you do with that? You prepare with today's numbers, not what you're hoping for in the future. You look at properties that already make sense, that cash flow at today's interest rates, and maybe even a little bit higher. So that way you are weathered, right? If it goes up, you're protected a little bit. If it goes down, bonus, right? So we have to get honest about the expenses. And you take advantage of Alberta's strong price to rent ratio, which is still better than a lot of major markets across Canada. Stable rates mean you can build a realistic plan, and you're not gambling on a maybe anymore. So when you zoom out, the message is clear. Rate stability means predictable borrowing, a more consistent real estate market, fewer surprises for buyers, steady demand for sellers, and an investing environment that rewards strategy over speculation. And it doesn't mean that things are going to get cheaper overnight, and it doesn't mean the bank is done adjusting rates forever. What it does mean is that the foundation beneath the market isn't shifting every 30 to 60 days. And that kind of consistency is exactly what builds confidence. If you've been sitting on the sidelines because you felt unsure or overwhelmed, this might be the most stable moment we've had in a long time. And if you're trying to figure out whether this is the right time to buy or to sell or maybe invest, your next step shouldn't be guessing. It should be running the numbers based on your current situation. Everyone's goals, payments, and timelines are different. So if you want help breaking down what this rate hold means for you, your budget, or your next move, reach out, send me a message, maybe drop a comment down below. I'm always here to help you make sense of this stuff so that you can move forward confidently. I would love to hear it in the comments. Were you hoping for a rate drop, or were you hoping for things to stay the same? I would love to hear it. So make sure you drop them in the comments below. I would love to hear your thoughts. And until next time, I will see you in the next one.